The strategy that I'm about to show you will allow you to take trades like this, where price like immediately go into profit, and you can see price just literally go to the moon, and you have a huge, insanely high risk to reward ratio. So if you want to learn how to take trades like this, continue watching this video. Now, I'm about to share with you tremendous amount of value when it comes to scalping. I'm going to show you exactly step by step on how to do this, right? But what I need you to do is to be focused, right? Be focused on what I'm about to say and stop scrolling through the comments and reading through the comments and just like comment and looking at the suggested videos. That will not help you learn when it comes to trading, right? So I need you to be focused on what I'm about to say, absorb what I'm about to say, and take down some notes, all right? And then once you can implement this trading strategy on your own, trust me, you'll be able to take this insanely high risk to reward ratio trades, like 1:60, 1:50 even. Now, when it comes to scalping, right, the first thing before you do anything is that you must establish your directional bias. That means you have to understand whether this is bullish or bearish, so you can decide whether to go in for a buy or go in for a sell. So right now, we can see that price is in the uptrend, right? How do we know that? Because based on the external structure, we can see that price is creating a higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Price has just been continually creating your higher highs and higher lows. You can even draw like a little uptrend trend line somewhere right around here. And over here, after we have established the directional bias, which tell us that right now price is bullish, price is in an uptrend, so we should be looking to enter for a buy. Right, so right now you need to use other technical analysis tools to help you determine where to enter for the trade, right? So what I like to do is I like to plot the Fibonacci, because right now price is retracing. The moment price starts retracing, 100% you can pull out your Fibonacci and figure out where price is retracing to and where price is going to go next after it's done retracing. So over here, I can drag the Fibonacci from the swing low that we have right here all the way up to the swing high right here, because this was the highest point price went to before price started retracing. So swing low to swing high right here. And you can see right now price has literally retraced all the way down to this 38.2 level, somewhere right around this 38.2 level. You guys could even draw the Fibonacci from here as well. Yeah, this swing low to this swing high. Both kind of works, alright? So this swing low to swing high. So since we are scalping, obviously we are not going to be entering the trade on the daily time frame. Because if you enter the trade on the daily time frame, you're going to be holding the trade for days or even weeks, right? And we are scalping, so we are not going to be doing that. So the reason why I use the Fibonacci on the daily time frame is so that you can kind of like figure out where price is retracing to and where price is going to go next after the next few days, over the next few weeks, right? So this will kind of give you like a directional bias on where to enter for the trade and where to get out of the trade. So right now, price has managed to retrace all the way down to this 50 retracement level. And when price is doing this, I'm going to be going down to the smaller time frames to look for my sniper entries, because that's where we're going to be getting those like insanely high risk to reward ratio trades by going down to the smaller time frame, like the 5-minute or even the 15-minute or even the 1-minute time frame, to look for your sniper entries. You're not going to get sniper entries from entering on the daily time frame, because if you enter on the higher time frames, your stop loss is going to be super wide, and guess what? No sniper entries for you, baby. So what I want to do right now is to be calm, do your top-down analysis, right? So daily time frame, and if you go down to the 1 hour time frame, see what price is doing, and you can see price just has been consolidating around this area that we have right here. And then if you go down to the smaller time frame, like the 5-minute time frame, right? This is when you can ideally want to look to enter for your trades, right? Look to enter for your trades, and you can see like price is starting to lose momentum. So this little downtrend, this retracement that we have right here is starting to lose momentum. How do we know that? You can see like, remember price was just consolidating on the higher time frames. I can see price just consolidating on the higher time frames like this, right? And it was creating like this little retracement market structure, this downtrend market structure. So this is what we call the internal structure, right? The internal structure is lower high, lower low, lower high, lower low, lower high, and lower low. So this internal structure is your downtrend, and it's a retracement, all right? Do not get trapped by the smaller time frames. A lot of scalpers, what they usually do is that they go down like to like the smallest time frames possible, like the 5-minute or even a 15-minute time frame, and then they see that price is in a downtrend, then they immediately just enter for a sell randomly. But if you zoom out at the big picture, if you go up to the higher time frames, you will know that price is actually in a uptrend. So in that case, you're just trading against the trend, and you will never ever know when the overall trend is going to wipe you out. Listen very, very carefully. Take that into your account, right? So that is why we always make sure that we use multiple time frame to do our analysis. You can never ever just choose one perfect time frame and stick to it. You need to use multiple time frame. It all ties in together. Whew, that was a huge breather. Oh my god. Okay, so right now, price internal structure is downtrend, right? Internal structure is downtrend. So we want to trade with the overall trend, the higher time frame trend, which is this uptrend. So we should be looking to buy, and we have a bullish bias, right? We should be looking to buy. But right now, the retracement is in this little downtrend. This internal structure is this downtrend. So ideally, we want to wait for this internal structure, this downtrend to end and reverse to become an uptrend, so that the internal structure will line up with the external structure, which is uptrend. Then that is when we can look to buy. So right now, what we're going to be looking for is some sort of break of structure, right? We're going to wait for price to break out of this downtrend to reverse to become an uptrend. So once again, we go back down to our 5-minute time frame for our entry, right? And you can see 5-minute time frame price has just been creating lower highs, lower lows, lower high, lower high, lower low, lower high, lower low. So internal structure is still downtrend. But this downtrend, like I said, is losing momentum. How do we know it's losing momentum? By looking at the candlesticks, observing the candlesticks. Right now, price has managed to retrace to this 50 retracement level. Is it 50? Yeah, it has managed to retrace down to this 50 retracement level that we have right here. And when price is at the retracement level, buyers are going to be waiting for a nice entry. Buyers are going to be waiting right here to enter for the trade. So right now, we want to see some sort of bullish momentum, right? So right now, price is just consolidating, showing us that this downtrend, the seller's liquidity are drying out somewhere right around here. And a lot of buyers, right, a lot of retail traders, they will just enter immediately for a buy right here when price has retraced back down to this area. And then they'll place a stop loss right here. Super duper tight, like just below the consolidation right here. And then next thing you know, price will stop you out. Price will like literally do this, like go down, stop you out, and then just go up in your way, right? That's what a lot of retail traders will do. Dangerous mistake, right? And the reason why price has retraced to this level is if you look towards the left, right? If you look towards the left, you see the last time price has retraced back to down to this area was like somewhere back in January, right? Somewhere back in January, price has also retraced down to this area right here, right? So we know that somewhere right around this area here, there's going to be demand, right? There's going to be demand. There's going to be buyers waiting at this area here to enter for a buy. So the next time round, which is right now, price coming down to this area here, we're going to be expecting price to go up, right? And you can see right now, price is broken past the area, but it's making small candlesticks like this, showing us like there's not much seller's momentum. So this is 100%, or rather most likely a fake out. So over here, we are waiting for price to reverse. So once again, go down to the 5-minute time frame to look for your internal structure, right? And you can see, once again, price has just been consolidating like this, creating your lower highs and low lows, right? Low high, low low, low high, and low low. But over here, look at what price is showing us. Price is showing us some sort of like shift in market structure. You can see price starts creating your higher highs and higher lows, higher highs and higher lows. So you can start seeing price kind of like creating your higher highs and higher lows at this area. But we're not going to be entering for a buy yet because we're going to wait for liquidity to strike. So right now it's still wait, and you can see price just like consolidating around this area here. And boom, there we have it. That's the liquidity, right? You can see price goes down there. And if you entered for a buy over here, like all the retail traders, they enter for a buy immediately without any confluence and place a stop loss below here, they will have gotten stopped out. Enter here, guess what? You still will have gotten stopped out, right? So you need to wait for some sort of liquidity to become into the market. And this is what we call liquidity, right? Look at this insanely long wick right here. This shows us that at some point of time, the banks, right? The banks, the big boys, the smart money, literally pushed the price all the way down here to this 1.18 level and stopped out all the retail traders. So let's say this is all the stop loss right here. Stopped out all the retail traders, and now they have more liquidity to drive the price up. So at this point of time, when I see this, I'm gonna be cautious. I'm gonna be look to enter for a buy position soon to get my sniper entry. And I can see price still continue going up, and boom, you can see somewhere right around within this candlestick, right, you could have easily entered for a buy. When you see this huge, giant, bullish engulfing candlestick right here, right, you could have entered for a buy. If you wanted a more sniper entry, right, you could have went down to like, let's say the 1 minute time frame to enter for a buy. Or you could have entered immediately after price has came back down to this area here, to this area right here, and grab liquidity, right? Somewhere right around here, there's liquidity, it's buyer's liquidity. You can see right here, 1, 2, 3, 4. 4 times price come back down to this area, and it always end up back up. So what you could have even done is you can place a buy limit order, buy stop or buy limit. I forget which one is it, but you can place a buy order right here where the broker will automatically get you into a buy position. So what you could do, place a buy order right here. And in that case, I'm going to be placing my stop loss below this liquidity area right here. So maybe put like a 5 pip stop loss. And then my take profit, this is where things get interesting. This is how you can get those insanely high risk to reward ratio. For a take profit, ideally you want to aim to get as much pips as possible, right? As much pips as possible. So it really depends on the time frame that you are holding the trade on, or rather the time span that you're holding the trade on. If you're scalping, maybe because you can get out like somewhere right around here, right? Somewhere right around here, at the next key level, or even like somewhere right around here, the next key level, you can get out of the trade if you are scalping. Right? If you're scalping, you can just get out at this resistance area here, somewhere right around here. But if you are more of like a intraday or swing trader type bit like me, right? What I like to do is to ideally maximize the amount of profits that I can get from the market, maximize the amount of profits that I can extract from the market. So that's where I will zoom out to the higher time frame to look to for my take profits levels. So zoom out, zoom out, zoom out. 4 hour, and I can see 4 hour, there's a major resistance area right around here. Right, there's a major resistance area right around here. 1, 2, 3, 4, 5, 6, multiple times, price rejected at this area right here. So there's a very strong resistance area right here. So right now, I see that price is reversing at this 50 retracement level, which tell me that this retracement is about to be done. Guess what? I'm predicting that price will literally go all the way up here to this next resistance level. So that's where I will literally take my take profit, drag it all the way up here. So this is a 1:118 risk to reward ratio. And that's pretty freaking insane. 1:100 risk to reward ratio, guys. And obviously this is more of a swing trade already because you are literally getting like 600 pips in return. But I just wanted to be transparent with you guys and show you guys how I get these like insanely high entries, insanely high sniper entries, right? And obviously, if you're scalping, you won't be doing this because you won't be holding the trade for so long, right? So like I said, if you're scalping, you can look to get out at the next key level, right? The next key level on the 5-minute time frame. So it could be this area that we have right here, this 1.1846. You could literally take profit at this area right here. And without further ado, look at what price did. Price goes up there, smash your scalping take profit level. So your scalping take profit level is right here, and you smashed it, right? Smashed it, and if you zoom out to the higher time frame, like I said, this is 5 pips stop loss for a 600 pips take profit. This is pretty insane, and like I said, this is not really realistic to get it right all the time, right? Sometimes when you take this type of trades, right, you're gonna have a lower win rate, right? Which means that you will lose this type of trades most of the time. But when you win, guess what? You are winning 100 times the amount of money that you are risking, which is what makes this strategy like so useful, right? So you can see, honestly, I have no idea how long this is gonna take. This is probably taking about like days or even weeks to reach to that take profit level, right? Because ultimately, this is more of like a swing trade already. 1:100 swing trade. 1:100 swing trade, yeah, and it literally took like a few days or up to a few weeks to hit our take profit level. There you have it, guys. Ladies and gentlemen, that is how you can get 1:100 risk to reward ratio trades. When I started recording this video, I didn't expect me to get a 1:100 risk to reward ratio because I was honestly aiming for 1:50. But this is honestly how I would aim to trade using this scalping strategy to maximize the amount of money that I can potentially extract from this market. Right, and like I said, this is not really a scalping strategy anymore. But you know what? I'll show you guys how to use a scalping strategy. If you're scalping, remember your take profit shouldn't be 100 pips at all. It should be like 10 pips, 30 pips, 50 pips if you're scalping. This is more for those swing traders, right? This is more for those intraday and swing traders who want to get a higher risk to reward ratio. Now, if you want to learn more about this strategy, click that link in the description where you can get access to my trading course, which is called the Trading Blueprint, where I literally go into detail on all of these trading strategies, my best trading strategies. And also make sure you get the free ebook that I've written on how to become a consistently profitable trader. It's linked in the description, alright? So click on that right now. And if you want more scalping videos, click on this video right here to watch the next scalping video. And remember, you're just one trade away. Mwah. And don't forget to like the video. Peace.